All right, let's jump right in. Today, we're tackling a huge question that I think is on a lot of people's minds, especially with all the market chaos out there. Is investing in stocks still actually possible? Is it still a real path to building wealth?
Okay, so let's start with this gem from Reddit. Fundamental schmundamental. I mean, you gotta love the honesty, right? This perfectly captures this feeling that's out there. With meme stocks, AI going crazy, and everyone predicting the next big crash, it's easy to wonder, does the old rulebook for investing even apply anymore?
And you see it everywhere, don't you? On one hand, you've got artificial intelligence stocks just soaring to unbelievable heights. But then, on the other hand, you turn on the news and hear experts warning that a big downturn is right around the corner. So yeah, it's completely natural to feel like you've either missed the boat or that this whole thing is just one big casino. So, what we're going to do in this explainer is try to cut through all of that noise. We're going to go back to basics, use some simple, time-tested principles to see if investing in stocks still works. Let's break it down, starting from square one.
Before we can even get into strategy or anything fancy, we have to get really clear on a simple question. What even is a stock? What are we actually buying?
You know, I love this quote because it just changes your whole perspective. It takes investing out of this abstract world of flashing numbers and charts on a screen, and it makes it something real, something tangible. It's about ownership.
And that's the key right there. A share of stock or equity is simply a tiny piece of a real business. You're not just gambling on a ticker symbol. You're literally becoming a part owner in a company with real people, real products, and hopefully real profits.
And this brings us to a really important distinction: saving versus investing. Think of it like this. Saving is playing defense. You're protecting your money, keeping it safe for short-term stuff. Investing, well, that's your offense. That's about making your money work for you and growing it over the long haul.
Okay, so that leads to the obvious question, right? Why even bother with the risk that comes with investing? Why not just play it safe and stick everything in a savings account?
Well, the reasons are actually pretty huge. We're talking about building real, long-term wealth for massive goals like retirement. We're talking about beating inflation, that sneaky force that makes your cash worth less and less every single year. Plus, you can generate income through dividends, and you get to unleash the magic of compounding, where your money starts making its own money. It's powerful stuff. Just look at this chart of Coca-Cola, for example. For over 50 years, they consistently increased the dividend they paid out to their shareholders, their owners. For a long-term investor, that's not just a number on a page. That is solid proof of a healthy, profitable business that knows how to make money.
All right, let's move on and tackle the big one, the fear that stops so many people before they even start.
So the market's hitting all-time highs, and that little voice in your head says, it's gotta crash soon, right? This is a terrible time to buy. And look, that feeling is totally normal. It feels like you're about to buy at the very, very top.
But here's a piece of wisdom that has stood the test of time. Time in the market is way more important than timing the market. The data shows over and over again that just staying invested for the long run beats trying to jump in and out at the perfect moments. And if you need proof, just look at this. This is the 2008 financial crisis. It felt like the financial world was ending. But here's the crazy part. Even if you had the worst timing in history and invested right at the peak, right before it all came crashing down, if you just held on, your portfolio would have recovered and then soared to brand new highs.
Okay, so if trying to time the market is a fool's errand, then what is the smart way to do this? How can you actually invest smarter?
Well, it all comes back to principles, like this one from the father of value investing, Benjamin Graham. He talks about a margin of safety. It sounds complicated, but it's not. All it means is you do your homework to figure out what a business is actually worth, and then you try to buy its stock for less than that. It's about buying quality at a discount, not just chasing whatever's hot that week. And you can see how this holds up over time. I mean, the big companies in the Dow Jones Index in 1934 look totally different from the ones in 2016. The names change, the technology changes, but the core idea of investing in solid, quality businesses, that pretty much stays the same. So instead of gazing into a crystal ball and trying to predict the future, a smarter approach is to just build a plan, a real framework. You figure out your goals, you get honest with yourself about how much risk you can handle, and you build a portfolio that fits you. This is your best defense against making emotional decisions when things get chaotic. And these principles, think of them as your guideposts. You diversify so you don't have all your eggs in one basket. You do your homework so you actually understand what you own. You fight that urge to panic sell or chase the latest trend. And you stay disciplined. Because remember, this is a marathon, not a sprint. Okay, so let's wrap this all up. What's the big takeaway here? How do we move from asking, is it possible, to actually doing something about it?
The goal is not to predict the future. Spoiler alert, nobody can. The real goal is to build a plan that's tough enough, that's resilient enough, to succeed over the long term, no matter what the market is doing this week or this month. It's a total shift in mindset, from reacting to the news to acting on your plan.
Because here's the thing, you can't control the headlines, you can't control the economy, but you can control your own goals, your risk level, your plan, and your discipline. So focus on that stuff, the stuff you can actually control. That's how you go from feeling anxious to feeling empowered.
So I'll leave you with this final thought. The market will go down again. That's a guarantee. The real question isn't if investing is still possible. The real question you should be asking yourself is, what's your plan for the next time it does? Because having an answer to that, well, that's what truly makes you a smart investor.